I just wanted to give you an update on the things to be aware of as we head into this new tax filing season. So you are looking out for those things that are new you've never seen before. You kind of know what's up, know what's coming. Welcome to the Sunlight Tax Podcast. In this show, we're talking about taxes, money, and careers for self-employed people who have a big vision for changing the world with their work. I'm your host, Hannah Cole, artist, design nerd, tax pro, author of Taxes for Humans, and the founder of Sunlight Tax. If you're a creative, wellness, or mission-driven entrepreneur who wants to grow your business sustainably, manage your taxes, and build a stash of fuck you money so you can control your time and have a bigger impact with your work, you are in the right place. Hello, beautiful. We are hot and heavy into tax season right now, and the official start date for U.S. tax filing is January 26th. So that is the first date that you are eligible to actually hit submit on your tax return. Now, if you're a listener to this podcast, you are very, very likely not going to be filing your taxes on the first day the tax season opens. Typically, that is somebody who is just a W-2 employee or has very, very simple taxes. And it's also often people who are just filing a very simple tax return to get a refund for the earned income tax credit. Now, note, if you are a low-income person who works, especially one with children, you may get money back from the earned income tax credit, and you can only get that money by filing a tax return. There are a lot of taxpayers who miss getting the money from that very wonderful tax credit because they don't realize that they have to actually file a tax return to get it. You know, there's a lot of taxpayers in the U.S. who make little enough income that they're not required to file a tax return at all, and they don't realize that they could benefit from filing. But those who do realize tend to file early. So on today's episode of the Sunlight Tax Podcast, what I want to bring to you is just what's new this tax year as we start to get ready for the official opening of tax season. What has changed? There are some new forms. The new tax form, the new 1040, is out for 2025 tax filing. Taxes are retroactive, so I'm not out of date. I know it's 2026, but you are filing your 2025 taxes. That's how it works. It goes backwards. So there's a brand new form called the Schedule 1A. I will flash it here. If you're watching the video version, you can see what it looks like here on screen. And I want to go over what the Schedule 1A is for. And I'm going to also just point out a couple things that are different this year on your tax return. New benefits, tax breaks, and a very, very important note for those of you who either had a baby in 2025 or are about to have a baby. You are eligible this year. This is the starting year for babies born between January 1st, 2025 and December 31st, 2028 to both claim a Trump account and tick off that you would like a free $1,000 deposit into that account from the U.S. Treasury. Okay, so that is free money potentially on the table for you if you have a baby born between 2025 and 2028. Obviously, 2028 is not upon us yet. Some of those babies are a mere twinkle in the eyes of the parents at this point. Okay, but stay tuned. If you're in that boat, please don't miss that part of this episode or share this episode with a friend, because those people who had a baby in 2025 especially can get free money and you want your friends to know, right? All right, so what's different in tax season this year? Okay, so some changes that you're going to see. You're going to see a little bit of a new layout on the 1040. There was a font change for those of us design nerds out there. And the big deal is that there is a new schedule called the Schedule 1A. Effectively, this is just a new schedule on your tax return to capture the four big new deductions, temporary deductions, all four, that come from the One Big Beautiful Bill Act, the Republican Trump administration passed tax bill that was passed July 4th, 2025. Okay. Now, Not for nothing, this form pulls them all out, lays them all out, and calculates your savings all in one place. This is very much timed to come and be something that you see with your eyes before the midterm elections. It's important to note that all tax cuts are trade-offs, right? We are always working with a certain amount of money being somewhat finite, not entirely. In general, I would say that the new tax bill gives a lot of sugar rush up front, especially in the form of these 4 temporary deductions for, I would say, voters. And on the back end, in 10 years from now, the deficit will be so high and the interest payments on that deficit so high that there will be very little room for any discretionary funding in the U.S. budget if this bill is allowed to continue in its current form. So it's a pretty big trade-off. We are trading a little sugar rush today for a pretty enormous deficit tomorrow. And mostly that's not due to these 4 tax deductions. Mostly that is due to the enormous benefits that come in this tax bill that primarily benefit, and this is not a partisan statement, this is a fact-based statement based on research done by the Tax Policy Center. The primary beneficiary of this new tax bill are taxpayers with incomes over $400,000 at the expense of taxpayers on Medicaid and in the lower income thresholds. All right, with that little downer, that little disclaimer out front, let's talk about the new Schedule 1A and the 4 deductions that are on it. Okay, so you'll see on this Schedule 1A, deduction number 1 that's on there is the no tax on tips, okay? Now, that rule, I've been over this when I talked about the tax law changes, but this will serve as a little review for that. Newly in 2025, up to $25,000 in tips. This is per household, not per individual. So if you're married filing jointly, that is a total limit, not a per individual limit, okay? So up to $25,000 of tips. This deduction phases out if you're single and have income over $150,000. If you're married filing jointly, over $300,000. As with all of these deductions, a social security number, a valid social security number is required to get that deduction. And if you're married, you must file a joint tax return to get this deduction, okay? Married filing separate doesn't get this. Okay, also, it's important to note that the tips are only in fields that customarily and regularly receive tips, okay? So hairdressers, servers in restaurant, bartenders are definitely eligible. If you're in a field that does not get tips, let's say you are literary agent, and you get a tip from an author, right? Because you did a great job. Great, good for you. You'll have to report that taxable income, but there's no deduction for you. So it's only for people who are customarily and regularly in fields that get tipped. Hey, real quick, I just want to pop in and tell you that my book, Taxes for Humans, is available in bookstores now. Taxes for Humans is the funny, empowering, practical tax guide that will help you do your own taxes and make them easier every year. Taxes for Humans is the most useful tax guide you've ever seen. This book gives you all my secrets and will be a reference you use year after year, with a whole section on fixing a bad tax situation, spouses gone rogue, amending your tax return, what to do if you can't pay your tax bill, plus tools for leveling up, like setting up simple systems to stay organized and saving like a millionaire with tax-smart accounts. Get the book at your favorite independent bookstore or come to my website, sunlighttax.com/book. You can even request Taxes for Humans at your local library or college library. So if you want to get the book for yourself, go to sunlighttax.com/book to buy Taxes for Humans. I can't wait to help make your taxes easier. All right. Second deduction on the new Schedule 1A, no tax on overtime. All right. So this one is per individual, not a limit for a married filing joint couple. So up to $12,500 of your overtime pay, if you're single, or up to $25,000 if married, is eligible to get a deduction. All right. Similar to the no tax on tips, this phases out when your income is over $150,000 if you're single, $300,000 if you're married filing jointly. You must file jointly if you're married to get this deduction, and a social security number is required. Number 3 deduction on the new Schedule 1A, no tax on car loan interest. This is kind of a new one. This deduction on car loan interest is only for cars purchased in 2025. And these are personal use cars. This is not for business vehicles, okay? Up to $10,000 of that loan interest is deductible. Grant you, that is a very big car loan if you're paying $10,000 in interest. So you might want to just consider that. Do some back of the envelope math to figure out. And the phase out is a lower number. So this phases out if your income is over $100,000 single, $200,000 if you are filing jointly. All right. And then the fourth and final deduction on the new Schedule 1A on your 2025 taxes this year is the enhanced deduction for seniors. Now, I don't think a lot of people who listen to the show are in this demographic, but there are some things that are going to touch seniors this year. So listen up if you are. Maybe send this episode to your senior friends if relevant, if it could benefit them. So on the Schedule 1A, if you were born before January 2nd, 1961, you are eligible potentially for up to $6,000 enhanced deduction. This sort of gets added, bumps up your standard deduction this year. Okay. This has a lower phase out than some of those other deductions. This phases out if you have $75,000 of income if you're single, or $150,000 if you are married filing joint. Again, you have to file a joint tax return to get this enhanced deduction if you're married, and you also need a valid Social Security number. That $6,000 enhanced deduction is per senior. So if you are part of a couple, you're married to someone who is also a senior, they can individually get their own $6,000, so up to $12,000 in a household with two seniors, okay? All right, so some more things that are new on this year's taxes, though now we're departing from the Schedule 1A. We're just talking about general changes for 2025 as we head into the 2025 filing season. Trump accounts. This is a big one. Now this, despite a name that I don't adore because it's obviously partisan, I generally support the idea of a Trump account. I generally think it's a great idea. You know, there's been this idea floated in a more neutral way called a baby bond. And this actually is that idea. It's impressive to me that this got put into the new tax law. So this is a pilot program. And for now, it's only a limited number of U.S. babies who are eligible for these. Only children in the U.S. born between the years 2025 and 2028. So that's not a huge population. But if you have a baby in that time frame, you are eligible to be a part of this pilot program for Trump accounts. It's actually a pretty cool thing. I will dedicate a future Sunlight Tax episode exclusively to Trump accounts. But this is the year you can elect to get yours to claim a Trump account. And you need to have a second election to actually elect to get the $1,000 contributed to it by the U.S. Treasury. This is a free $1,000 that will be given on behalf of that baby who's born between those years. And it will be invested in low-cost index funds, which is a great idea. So it's actually pretty cool. And these Trump accounts, one of the features is that the money must remain invested in these low-cost index funds over the childhood, basically, of this baby. And when that child turns 18, that money can be accessed by them to be used for education, to start a business, or to buy a first home. The money will be taxed at ordinary income tax rates. But if you just take a look at a compound interest growth chart, what an investment over an 18-year period will do, you will see why this is such a beautiful, good idea. Plus, the money can stay in there longer, and there are some rules around additional contributions that can be made to these accounts. It's a really cool idea. Again, I'll talk about Trump accounts a little more in the future. For now, the thing to know is if you had a baby in 2025, you are eligible to elect into a Trump account and make an election to get that free $1,000. There's a special form you'll need to find called the Form 4547. And that is the form to elect this Trump account and make that election to get the $1,000. You can file it with this year's tax return, but you will have to know to do it, and you'll have to proactively fill out that form, okay, and submit it. So if you're doing your taxes on your own, make sure that you note that. Also, if you're doing it with a tax preparer, please note to them that you just had a baby, okay? Or if you're pregnant or your partner is pregnant, note to your tax preparer the due date and ask them when is the moment that you should elect into the Trump account. Okay? All right. So that's pretty great news. And please, if you have a pregnant friend, if you have somebody who had a baby in 2025, please share this episode with them because that is really key information. That is free money on the table that they're eligible to receive on behalf of their child. All right. Moving on. There's a new tax form this year, a new kind of 1099 called the 1099 DA, and the DA stands for digital asset. So effectively, this is basically to make sure that people trading crypto and digital assets report the gains on sales of digital assets. There's already a checkbox on your 1040 that attests that you know that there are rules around digital assets and you are following them. So please be aware you are on the hook for this. But this year, brokerages are now required for the 2025 tax year to send you a statement about your digital transactions if you had any gains or losses on digital transactions that happened through a brokerage in 2025. Now, just like all 1099s, please understand the rules are very clear. Even if you don't receive a 1099 for that transaction, but you had that transaction, it's still taxable. And by law, you must still report it. Okay. So there's no getting around if you don't get that tax form, but I'm just making you aware that it is a new tax form and you might receive one this year. All right. Another note for those of you in your early 60s, starting in 2025, there are higher catch-up contributions for people ages 60 to 63, okay, for a 401k, 403b, government 457, and government thrift savings plan, okay? So that higher catch-up contribution only for those ages, age 60, 61, 62, and 63, that higher catch-up contribution is $11,250. Don't ask me why they cut it off, just that tiny little window of people, but there you go. If you happen to be in it or you happen to have a friend in it, please share the episode with them because maybe they didn't sufficiently fund their retirement early in their life, but they're, getting on board and want to do it now. Go ahead because you have a bigger limit this year. Okay. There's another update to 1099 rules. I mentioned this in the last episode about 1099s last week, but 1099Ks, which are the statements that are sent to you if you take payments through a third-party payment processor or an online seller, the rules got changed this year. The threshold for filing those, for getting sent those, was scheduled to come down, and this One Big Beautiful Bill Act raise the threshold back to its old threshold. So now this year in 2025, you'll only be sent a 1099K from a third-party payment processor like Stripe, Venmo, Square, etc. if you have made over $20,000 in transactions and had over 200 transactions, okay? So if you got a 1099K last year, you might not get one this year if you don't meet that threshold. Of course, you still need to report that income. Okay, couple little things at the end here. There is an increased standard deduction this year. Now, the standard deduction increases every year, so this is not unusual, but the One Big Beautiful Bill Act did bump it up a little extra. Of course, they made that law change as soon as my book had already gone to the typesetters, had already been through copy editing, and there was no way for me to stop this particular item from being printed in my book. So it is actually listed as $1,500, what the rule was before that bill was passed in Taxes for Humans. You want to catch a little error in the book. Everything else in the book so far that I know is completely accurate, and I link you in the book to the places to find the updated information for this year. That's one of the ways that I've kept that book evergreen. So it's a book that will guide you not just this year, but every year. Anyway, the new standard deduction, slightly increased because of the new tax law, is $15,750 if you're single, $31,500 if you're married filing jointly, and $23,625 if you're a head of household. That means that you are filing single, but you have dependents. All right. One last thing. There is the child tax credit this year has been increased slightly from $2,000 per eligible child or dependent to $2,200. All right. So I know that's a bit, that's a bunch of information. Maybe listen to this podcast twice if you need it again. I just wanted to give you an update on the things to be aware of as we head into this new tax filing season. So you are looking out for those things that are new you've never seen before. You kind of know what's up, know what's coming. And please, if you have a friend who you've heard something relevant in this episode that might benefit a friend, like someone who had a baby in 2025 who wants to get some free money, or somebody over age 60 who could benefit from those enhanced catch-up contribution limits, please share the episode with a friend. Also, I'm so grateful when you do that. It really helps the Sunlight Tax podcast reach new ears. All right. Last thing, I just have a little announcement to make, which is that on January 27th, I will be hosting a free class. It is a class that I have taught before. You're welcome to come again, or if you have never been before, this is a great time of year to come to the class, get psyched up for making this year really easy and simple with some very, very simple systems to make your taxes easier, not just this year, but every year. And also to build funds for your future. That is the whole point of what I do, because I love the work that people like you are doing in the world, and I want you to be more powerful by having more money. So come to my free class. It's called Make Taxes Simpler and Stash an Extra $152K in Your Savings. Yes, I really will show you the math on how that works and how that's possible. And I'm just really excited. It's a really warm, engaging class. If you feel a little fearful about taxes, it's a really great way to be like, oh, I'm learning a couple things about being self-employed and how taxes work. I think I got a better handle on what's going on and what I might need. Okay, so the class is really encouraging. And if you want to come join me, it's free. You just need to save your seat, and I'll send you some reminders as the class is coming up. So that class, again, is January 27th, and you can sign up for your free seat, save your seat at go.sunlighttax.com/free. So one more time, that's go.sunlighttax.com/free. I can't wait to see you. That class is just in a week. I will see you then. And happy tax filing until that point. I hope this helped you with your taxes as you get ready to get in all that paperwork and get everything ready for your 2025 taxes. All right, I'll see you next week. Take care. Bye. Thank you for listening. If you like the show, be sure to subscribe, leave a review, and share it with a friend. It really helps. I'm so grateful. My tax guide, Taxes for Humans, is available wherever you buy books and at sunlighttax.com/book. This podcast is for education and entertainment only. Nothing in this episode should be taken as individual tax or financial advice. You can find all the tools, books, and links I reference at sunlighttax.com/podcast.